So what are the biggest money losing mistakes in the stock market? To give you a really concrete idea, I'm going to bring up some pictures from a subreddit called Wall Street Bets. And this subreddit is all about gambling in the stock market. At least that's the stigma around it. And a huge thing that they don't do is they don't have good trade size management. And so what happens is they will trade way too big of an amount for their account, and so they will lose most of their account over a couple of months or even overnight. And that is the first huge mistake when it comes to trading, is trading too big a size for your account. With this picture right here, you can see that this person lost over 60% of their account overnight. And not to mention the fact that it was $300,000 that they lost overnight. But even if it's just losing 60% of your account overnight, that's huge, because everything in the stock market is percentages. It's all about making money slowly over time and not losing it. When you do have big trading size, you can get lucky sometimes and have big spikes up in your account and make a lot of money. But quite often is that luck will eventually run out and your account will eventually start to lose and go down. This person right here, they lost 97% of their account over about a year. And again, you can still get lucky with this person's account right here. They were slowly losing their money over 3 months, but they got lucky with one trade and it worked out in their favor, right? But again, it will eventually not work out in your favor. This next person right here, they lost 60% of their account in one day. And not to mention that it was $40,000. So you can see these swings that a lot of these people have, and especially that first picture I had, are huge amounts of money. Especially if that's all the money you have, it's not worth risking losing it overnight. Trading is a really long endeavor, and you need to be able to survive unlucky trades and just trades that go against you. Maybe you're trading and all of a sudden some really bad news comes out, right? And your account or your trade gets tanked over that. You don't want to be having all your money in that one trade, because then your account is gone just over some bad luck. Bad luck happens. The market is like that. It's like a casino. There is luck and variability in the market. Now, the second thing that you really want to pay attention to, kind of goes along with trade size, is just overall account management and how many trades you have on at one time. Even if you put 10% of your account into one trade at a time, that's decent trade size management, right? That's not 50% of your account in one trade or 100%. But if you then put 10 trades on that were 10% each, you still have 100% of your account in the market. And so let's say just the market has a huge overall correction, then you've still lost a ton of your account if all those trades end up losing. And so trade size and account management kind of go hand in hand in making sure that you don't have too much in the market at one time and too much in one trade at one time, because the overall market is correlated. So a lot of your trades will move together, but also if you don't want to have one stock to have, earnings come out, some news come out, and it just tanks in one direction. Now, of course, everything can happen in reverse. If you have all your account in one trade, it can just skyrocket, but it's all about that long-term return over time. Now, probably the biggest money losing mistake that people make is jumping into real life trading right away. I totally get it, wanting to jump in and make money right away, but in reality, most people lose money in the stock market. And so if you kind of just take a step back from, ego or whatever, and just accept that you're probably going to lose money, there's no reason to put real money on the table when you could be just learning the same amount in reality when trading in a paper trading account or simulated trading account. I have totally been there and wanting to jump right in and trade real money, and in the end it really just loses you money. It's so much better to jump into a paper trading account, and I can't stress this enough, just because it's something so many people skip on and so many people lose money because they don't do it. It is perfectly okay if you paper trade for a year or more. If that's how long it takes you to become consistently profitable or really get a grasp of what you're doing, that's okay, because you didn't lose any money. There's so much misinformation out there of being able to make money quickly in the stock market and that it's easy to do. It is easy to make money quickly if you get lucky, but to be able to be consistently profitable over a long period of time is very hard. Think of it like any other profession. How long does it take you to become proficient in some profession? It takes people years to become something like a doctor or lawyer. Think of trading the exact same thing. You're not going to become a doctor or lawyer overnight or even over a couple months. It's going to take you a long time to become good at trading. Now, that doesn't mean you can't get there quickly and start to make some profits, but it doesn't mean you're going to be able to make it a full-time job or anything right away and out of the get-go. I just want to say this just to kind of give you an expectation on reality. I think a lot of people go into it with an idea of they will be able to quickly master it, and I think that is far from the truth. There are a select few that do, but that is generally not the case. Now, emotions are huge when it comes to trading in the stock market, and a huge thing that separates losing traders from profitable traders is being aware of those emotions and how they affect your trading and being able to act on that. A really big one that affects everyone, and especially when you first start out, is FOMO and the fear of missing out. And so this is just the urge or the sensation and essentially greed of wanting to jump in on a trade or a stock that is taking off and skyrocketing when it is really overextended and not in a good place to buy. You want to be buying stocks when they're in a safe spot to buy or an area that has a higher percentage of profitability. When you're buying a stock after a ton of people have already bought it, it's less likely that you're going to be profitable. Of course, a stock could always keep going up and you could get lucky, but it just decreases your chances of being profitable. So many swings in the market try to trap people and bait people into buying, and then the market will switch and cause those people to lose money. That's why the market moves in waves and never really goes in one direction. It likes to cause people to lose money because that's how other people in the market make money. Essentially, this is a zero-sum game, right? And so someone has to lose for someone to make money. And so when the market swings up, there is eventually going to be people that are going to have to take their profits, and this is going to cause others to lose money as the market starts to go down. And so this is why it is so important to not chase trades and to be disciplined when you are trading. And so this is kind of the next thing when it comes to trading, and a big mistake is being too impatient when you trade. There are so many opportunities out there when it comes to trading, and so you don't want to be chasing trades feeling you're going to miss out on this trade, because that is such a good way to actually get into a bad trade and end up losing money. It can be really hard to sit on your hands and knees sometimes, especially when, like currently right now, the market is going up and up and up. And sometimes the market, like on a daily chart, there won't be a good place to buy in the market, and you just have to sit on your hands. If you're not already in the market, you kind of just got to sit and wait it out, which really sucks, but it's just a reality of trading. And being patient is really important. So to sum up the 5 mistakes, trading size and account management are kind of the 2 first key ones and go hand in hand. You really want to make it so you don't have a chance to blow up your account. If you even have a 0.001% chance that you lose everything, it's still a chance that you don't want to take, because even if over 10 years you make a ton of money, but on that 10th year you lose everything, you could still lose years of work. And so that is really something you want to try and avoid. Now, the next thing is paper trading. This is almost the most important thing, because you can make all these mistakes, but if you're paper trading, you're not going to lose any money, and you're still going to be able to learn from those mistakes and improve your trading until you can actually start consistently make money trading in a simulator, and then switch over to real money trading when you actually kind of know what you're doing. There's so much information when you first start learning, and it's so exciting to want to jump into trading the market once you learn all that stuff. But in reality, there is probably so much more you still don't know, and just experience that you don't have. Experience is a huge thing in the market. Even doing this for 5 years already, I feel like I learn something every time I trade. And so think of it just like that, in terms of there's the time frame of you being in the stock market and trading. If you're only just beginning, you've only just started. And then the last 2 things are, not trading in your emotions and being patient. You don't want to chase trades that have already kind of taken off. And then also you don't want to be taking too many trades. You need to be patient and only wait for those trades that you are 100% sure about, that you know are going to work every time, because those are always the good trades. Taking the trades that is kind of like 50-50, or you think, there's a pretty good chance that this is going to work out. Those trades might work some of the time, but they're also going to lose more often than those trades that you're positive about. And it's best to try and be disciplined and wait for those trades that you're positive are going to work every time. So hopefully this helps you avoid losing money in the future. If it was helpful, hit that like button. And if you want more information like this and want to follow, hit subscribe. And if you have any questions, ask them in the comments below, or you can find some links down there to contact me individually. And I'm always happy to answer any questions you have.